Hey guys, it is Julie here with TipRanks. Today we're taking a look at stock ratings from one of the newest top-ranked analysts. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. As I said, today we're taking a look at some recent stock picks from a newcomer to the very top of our analyst list. We're going to take a look at what these companies do, what this top analyst thinks about the stock, and how the rest of Wall Street weighs in as well. Now this is one of my favorite features at TipRanks, is that we're able to follow along with some of the best performing analysts on Wall Street. And we can do this from under the expert section under top analysts. We'll see our ranked list here. Now I spent a lot of time on this list, so I've become pretty familiar with the top 10. And so it really caught my eye when I noticed that Neal Dingmann here just moved into the number 1 spot. Neal is an analyst for Truist Financial and has a 76% success rating with an average return of over 30%. We're going to take a look at some of his recent stock coverage today. Just before we get into those stocks, this is your reminder to check out the TipRanks Newsletter Center for both their Smart Investor and Dividend Investor newsletter if you want some great, unique investing insights sent to you every single week. Links will be in the description down below. Now, jumping right into Neal's recent stock ratings. First up is Crescent Energy. He just came out with a buy rating on them today on August 11th. He's rated the stock 10 times before with a success rate of 67%. Their stock trades under the ticker CRGY, currently priced at just $13 per share. Now, over the past year, they are down 10%, but looking at the last 6 months, they've started to climb and are up 13%. Crescent Energy is a U.S. independent energy company. They have a portfolio of low-decline assets in proven regions across the lower 48 states that generate substantial cash flow supported by a predictable base of production. They do pay a quarterly dividend and declared the most recent one just this week. That quarterly dividend comes in at 12 cents per share for a current dividend yield of 4.97%. The next ex-dividend date will be on August 22nd for payment near the start of September. This recent dividend came out around the same time as their Q2 earnings report, where they did have an earnings beat. For their Q2, they reported earnings per share of 21 cents, coming in well ahead of the 9 cents anticipated. And the company reported $57 million of net income. They noted that their successful execution allowed them to raise their full-year expectations for production and cash flow with lower capital investment. They expect to generate substantial free cash flow throughout the remainder of the year, which will support their return of capital strategy focused on their dividend and debt repayment. Following that earnings report, we have had 4 analysts weigh in on the stock, and it does come in as a moderate buy. Based on 3 buy ratings and 1 sell, the average price target comes in at above $16 per share, which would be an upside of 21%. Down below, obviously on the low end, we have our sell rating with a downside of 10%. But on the high end, we do have our top analyst Neal here from Truist. He gave it a price target of $20 per share, which would be an upside of nearly 50%. He noted that the company's Q2 results highlighted continued well productivity and operational efficiencies that have resulted in being able to notably decrease upcoming capital spend while still maintaining stable production, driving improved free cash flow. So he's projecting some pretty generous upside potential there. Now, another stock that Neal has been recently bullish on is SilverBow Resources. He came out with a buy rating on SilverBow Resources just a few days ago on August 7th. Now, he has rated this stock 16 times before with a 78% success rating. Their stock trades under the ticker SBOW and is currently priced at $39 per share. Now, they did have a drop-off here, and overall in the past year are down 2%, but looking at the last 6 months, they've begun to rebound, and they're currently up 54%. SilverBow Resources is an independent oil and gas company. They have assets in the Eagle Ford Shale and Austin Chalk in South Texas. With 30 years of technical experience within the basin, they drive shareholder value through best-in-class operations, opportunistic additions of high-return inventory, and sustainable free cash flow. They have approximately 180,000 net acres. Their most recent earnings report came out on August 2nd, and they did deliver some promising results. Following a few quarters of falling short of analyst expectations, earnings per share of $1.60 did come out in line with estimates. They had second quarter equivalent net production at the high end of their guidance, with oil production exceeding, and their production increased approximately 40% year over year. They were also able to lower their full year 2023 CapEx guidance by 10%. Following their earnings report, their CEO noted that SilverBow's differentiated strategy is delivering growth while living within cash flow. They are guiding to free cash of $10 to $30 million for the full year and expect their free cash to expand significantly in 2024 due to the increase in their oil production this year and plans to ramp up gas production next year. Our top analyst, Neal, is actually one of the only real current analyst ratings on the SilverBow stock. It does not gather a ton of attention from Wall Street. In fact, there is just one other rating on the SilverBow resource stock. The average price target comes in at $48, which would be an upside of 22% for the next year. But looking down below, we can see that second rating is a couple months old from an unknown analyst at Northland Securities. Now, Neal's came in at $51 per share with an upside of nearly 30%. He noted that the company continues to expand upon its sizable Eagle Ford position with the most recent addition of 2.2 thousand net acres, and that they should be able to grow oil production by 100%, decreasing their natural gas production weighting to below 60% by the end of next year. And the third company that's got the attention of our top analyst, Neal, is Northern Oil and Gas. This is another company that he came out with a buy rating on August 7th, and he's rated them 41 times before with an impressive success rate of 92%. Northern Oil and Gas trades under the ticker NOG, currently priced at about $42 per share. Over the past year, they've seen growth of 47%, including growth of 26% in the last 6 months. Now, obviously, as the name suggests, this is another oil and gas company. They are the largest publicly traded, non-operated exploration and production company. Their primary strategy is investing in non-operated minority working and mineral interests in oil and gas properties with a core area of focus in the premier basins in the United States. Northern Oil and Gas does pay a quarterly dividend, and their current dividend is 38 cents per share for a current dividend yield of 2.97%. Their next ex-dividend date is on September 27th for payment on Halloween at the end of October. Their latest earnings report also came out on August 2nd, where they had an earnings beat. They reported Q2 earnings per share of $1.49, coming in 13 cents ahead of analyst expectations. They saw record quarterly production of over 90,000 barrels of oil equivalent per day and net income of $167.8 million. Management noted that NOG made meaningful strides in expanding their exposure to high-quality, low-break-even acreage in the second quarter by executing on 2 highly accretive, large-scale acquisitions with Forge and Novo. For the remainder of the year, they see potential for record levels of production and elevated cash flow from operations and free cash flow as they begin to harvest their first-half investments. Now, on the ratings for this stock, Neal is not quite so alone. There are currently 9 analyst ratings coming in with unanimous buys. The average price target comes in at $46 per share, which would be an upside of 10% from current prices. Down below, we do have a low-end buy rating with actually a slight downside as the stock has already surpassed their price target. Neal's price target of $56 would be an upside potential of 33%. Neal raised the price target up to $56, noting that the company is in a unique position after completing acquisitions and that they also cite Northern Oil's baseline production improving while noting their solid balance sheet. So there we have 3 companies that recently picked up a buy rating from a newcomer to the #1 top-ranked analyst list there. Let me know your thoughts on these 3 companies down below, and what are some of the other stocks he's covered that you like too. There's a bunch on that list there, so make sure you go and check them out. Thank you guys so much for watching. I hope you have a great day. Please keep in mind these videos are never a suggestion to buy or sell any specific stock. Make sure you always do your own research and due diligence. Thanks for watching, and I'll see you back here next time.